You're one who's sticking by his forecast in terms of Fed rate cuts, but you say the consumer's on the cusp of a significant slowdown. Was there anything in this report in particular that adds to this thesis?
Certainly the data were weaker. I think in particular, one of the things that Steve pointed to, the fact that restaurant receipts were down. I mean, that to me is kind of the ultimate discretionary category. And we've seen declines in 4 of the last 6 months at restaurants. So that is one signal. I think in general, we need to also pay much attention to the consumer spending data that are going to come at the end of the month, because most of the action for the consumer lately has been on the services side. So goods weakness alone is probably not enough to really move the needle for the Fed.
Yeah, the restaurant line item, Steve Liesman, stood out to me as well, and especially given that the consumer had a little bit of relief from lower gas prices overall, lower fuel prices, and yet they still felt the need to pare back on what they're spending out. It was the biggest decline that we've seen since January. What do you make of that? And you said that most economists didn't really see much in the retail sales data that makes them too concerned. So right. Can you put that into context for us?
Well, I have two thoughts on this, and I wonder if Stephen would comment on it. I have been thinking about just this very question, Melissa. The first thing is, I think there's a rejection. I was talking a couple of days ago about this idea of the $30 two beer and burger bill. I think people are recoiling a little bit at that. No matter what your income level, when you go out to something that used to be $20 and now it's $30, you're like, well, wait a second. I think I'm going to lay off of that. And I think we may be in the process of some disinflation or deflation. I don't know, Stephen, how the bean counters figure out when McDonald's goes to the $5 meal, and I'm talking about necessarily McDonald's all the time, but some of these other fast food value meals that are out there, there could be some disinflation in this food.
Stephen Stanley, I mean, in terms of Steve's comment regarding disinflation, what do you think? Are we going to start seeing that pushback? Are we going to start seeing prices come down? Because we had the gravitational pull lower from the lower end in terms of the McDonald's of the world, and even Starbucks now having a $5 sort of pick and choose menu, fighting with the higher end, which is like the $30 two beers and a burger kind of option.
Yeah, exactly. I heard Richmond Fed President Barkin speak today, and he said that what he's hearing in his district is that on the goods side, it's basically back to pre-COVID, that firms don't feel like they have a lot of pricing power. But the services firms still seem to be of the view that, hey, it doesn't hurt to try. And I think most of the energy around the consumer has been in services. It's been in eating out. It's been in travel and things like that. So if you do see resistance to price hikes in those areas, that would definitely be a pretty telltale sign that things are on the inflation side are looking up from the Fed's perspective.
What does a cusp of a serious slowdown look like to you, Stephen Stanley?
Yeah, I mean, the big issue for me is that I think the labor market is moderating, and that will mean slower income growth. And I think slower income growth translates into slower consumer spending growth. So I don't see a recession for the consumer necessarily, but I do see something like 1% real growth in consumer spending in the second half of the year.
But you're still sticking with 2 rate cuts for this year?
That's right. I have the first cut in November. Yep.
Yeah.
And then 2 for the year.
Yes. And Steve Liesman, what are you hearing in terms of the expectations on the labor front from economists? And are they starting to rethink what they've got penciled in for the rest of the year, given what we're seeing in terms of the slowdown, some signs of retrenchment on the part of the consumer?
I'm glad you didn't ask me the questions right out of Rick, because I'm still catching my breath from that A+, Melissa. I just want you to know.
It's shocking, right?
I think that's 3 A's in a row, as you pointed out, for the auctions. And I don't think he's losing his edge. Sometimes you get a little older, you lose your edge. No, he's still tough as nails, but he's using empirical data to figure it out. So I'm just catching my breath on that. What I keep hearing, Melissa, to answer your question, is that slowdown that everybody had been expecting for the second half of name your prior year is still expected. And I don't know how much credence to give it, right? So we were going to have a big slowdown in the jobs report last month. It didn't happen. And so now I see people saying, well, this slowdown is definitely happening. The Fed is looking at, I think, a whole bunch of job market metrics, and they are seeing generally a slowdown coming, better balance. They look at the quits, they look at the openings, and they do see something of a slowing happening, but not really so bad that it would cause them necessarily either to change policy or even to cut rates immediately because of it. So I think if we settle down to that 125, 150 area, the Fed would feel like, okay, this is pretty normal right here.